Joining us right now to talk about it is Liz Young. She's the head of investment strategy at SoFi, and Carrie Firestone, who is the chairman, CEO, and co-founder of Arias Asset Management. She's also a CNBC contributor. Liz, let's just start with you and what we heard in the last 25 minutes or so. The PCE numbers came out lower than expected or in line with expectations, depending on which one of those numbers you were looking at. That signals inflation coming down. Does that change your perspective at all with what you think the Fed might be doing from here?
No, it doesn't change my perspective on what the Fed might be doing, but I think the messaging that the Fed is sending is not necessarily ignoring the fact that inflation is coming down, but saying that the job is not done yet and they want some more time to make sure it's going to continue coming down at that speed. And actually, the expectations that the market has baked in are that inflation might even rise a bit through the rest of summer before falling again and maybe coming back down to target by next spring. So I think it's clear that the job is not done. The Fed has not walked away and declared victory, and that's important for markets to hear that message. I don't think that there's much effect of another 25 basis points, and in fact, I don't think there was much effect of this last 25 basis points. So regardless of whether they hike again or not, it's really about the narrative. And now we've got this pause built in before the September meeting to let more data roll in and find out what we think might happen.
Carrie, the other thing we've been watching so closely this week, earnings. We've heard so many of the companies reporting this week alone. What have you thought from the companies you own? What have you thought about the tone of the conference calls? What have you thought about the street's reaction to those numbers?
Yeah, hi, Becky. It seems as if the market has been reasonably positive and earnings have been better than many investors had feared. Also, you had companies which suggested that things are turning positive. I think you heard from Google and Meta, companies like S&P Global, for example, and Align Technology. Those are all stocks we own, that the worst is behind them. Digital advertising is beginning to pick up. You saw that in much better numbers at Google. A lot of impressions, ad impressions at Meta. Ad prices are still down, but that can change as the demand goes up. Align reported better numbers than many analysts had expected. S&P Global talked about there's starting to be interest in M&A. That means there'll be IPOs, there'll be more issuance. And so there's an enthusiasm that investors need in order to have the market broaden. If you notice over the last month, the biggest gainers are financials and energy. Utility is number 3, and that's very different from technology and communications, which have led the market all the way through the year. And you can't just ride that one horse indefinitely. You really need more participation. And perhaps we're seeing that now. And with better GDP and lower CPI and inflation generally, I think that's good news for investors.